FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. It's Kerry Lutz. The date is October 19th, 2015. Much to talk about. Earnings down pretty much across the board. What effect will it have on the stock market? Got major brand erosion taking place, both at Walmart, McDonald's, got Kmart's closing down around the place. What's going to happen to the economy? How are stock prices going to keep going up? Or are we headed for a major decline in the markets? And John Rubino, proprietor of dollarcollapse.com and co-author of The Money Bubble, with us now to discuss it. John, welcome.
Hey, Kerry. Good morning.
Yeah, so not good news on the home front, is there?
Yeah, corporate earnings are finally coming in the way everybody expected them to for the past year or so. You know, every time it was earnings season, every corporate earnings season, a lot of pundits would say, "Oh, we're going to get negative earnings. That's going to affect the stock market," and it didn't happen. You know, companies were able to engineer their earnings through various means, mostly through stock buybacks, to look better than revenues actually implied they should be. In other words, sales were flat to going down for a lot of companies, but earnings per share were going up, and that supported their stock prices. Well, this quarter, finally, it's not working anymore. Companies are reporting down revenues, but also their earnings are falling. And that's a huge sea change because you can't have a rising stock market in normal circumstances without rising corporate earnings, because that's the fuel that generates higher prices. You know, when a company is earning more, it should be worth more, right?
Yeah.
Well, stocks are down a little bit over the last couple of months, but earnings are down much more. And the numbers are really shocking in a lot of cases. You know, Walmart just announced a plunge in earnings and flat revenues, which for them is shocking because that's been the growth story of the past couple of decades. You know, Walmart always adds more stores around the world and they generate more sales and they get bigger and bigger. Well, apparently that's not going to happen. And on the announcement, the stock plunged, wiping about $20 billion from Walmart's market cap. So this was huge. And this morning, Morgan Stanley just announced that its profit dropped by 42% in the most recent quarter, year over year. And these big banks have been money machines for years and years because interest rates have been going down and down and down, which while they're falling is a good thing for bank profitability. And they've, at the same time, been able to manipulate these fairly placid, fairly stable, upwardly biased financial markets by having, you know, one trading desk push a market one way and another trading desk put a bet on that movement caused by the first trading desk. And so they would generate day after day after day of positive trading results, which is unnatural when you think about it, yet they were doing it. And now that's not working for them anymore. Their trading volumes are way down. They're not making as much money. They're not making nearly as much money by lending out their funds anymore. And so banks are in the beginnings of what looks like an existential crisis where their current business model doesn't work anymore, and they've got to figure out what to do about that. You know, Deutsche Bank just split off its investment banking arm, which is kind of a reversal of the trend towards financial supermarkets that occurred after the elimination of the Glass-Steagall Act, which separated various kinds of banking activities and allowed them to combine any way they wanted to. So, you know, we can spend this entire session talking about just corporate earnings right now because they're coming in bad across the board. You know, Johnson & Johnson, for instance, the big drug maker, had revenues that missed expectations, but their earnings were up. But you look a little deeper, and their earnings were only up because they cut their effective tax rate in half for accounting purposes. In other words, they just claimed that they owed less to the governments of the world. And so their earnings went up, you know, and so all people really saw was the headline number. But analysts who dug a little deeper saw that there was financial engineering going on there. And Intel, you know, big chip maker, revenue fell by 1%, net profit by 6%, but the number of chips it actually sold were down by 19%. So internally, these businesses are deteriorating at a apparently accelerating rate. And so a lot of these guys don't really have a solution anymore because they've already bought back all the stock that you can reasonably expect them to buy back. Even though they continue to buy more, it's not working anymore. The numbers have stopped being positive because the interest costs from borrowing money to buy back stock are starting to become notable. They're starting to make an impact on the P&L. And so now the more money they borrow to buy back stock, the higher their interest costs go and the lower their earnings go. And so they're kind of stuck now. And so it's going to be interesting to see what happens going forward. You would think in normal times that an earnings recession on the part of major corporations would lead to a stock market decline, maybe a bear market. And that kind of sort of seems to be happening. Stocks have plateaued and they're trending downward over the last few months, even though they had a nice pop in the last couple of weeks. And the one thing that could derail that is the Martin Armstrong theory that the rest of the world is in so much worse shape than us that capital is going to flow into U.S. financial assets, especially blue chip equities, just for safety, without any regard to the price that Saudi Arabians or Chinese billionaires or European expats are paying in order to get in. So we'll see earnings fall while prices go up, which means the PE ratio in the market is going to explode in that theory. So we'll see. Either one seems possible right now just because these markets aren't normal anymore. So you can't really look at history and necessarily draw any conclusions about what's going to happen in the near to intermediate term future. So in that sense, anything could happen. It's something we've never seen before. So we're living through a really interesting period of history, but a really hard period in which to trade based on old tried and true measures of valuation or momentum or whatever.
Yeah. What's the plan B? I don't see the Fed having a plan B. Do you? The corporations don't.
They'll go to the next stage of this, which is negative interest rates and massive fiscal deficits that are used to finance money given directly to individuals. QE for the people and negative interest rates will be what we see next time around. And that could happen as early as the first part of 2016, the way things are going. So there's another stage in the experiment, but there's no guarantee that it works because people at some point are going to figure out that, all this other crazy stuff they did didn't work. So why should we expect this newest batch of even crazier stuff to work? And once that idea takes hold, then they're done because there's nothing really left. If you can't fool people with easy money into behaving the way you want them to behave, and in your central bank, you really have nothing left. You got capital controls, but that's an admission of weakness and just sends money scurrying one way or another out of the system that imposes them. So 2016 could very possibly be one of those epical years in which an era ends. And, not a moment too soon from our perspective, right, Kerry? Because we've been wishing this would happen to get it over with for a really long time.
Yeah, and it's just going to be that much worse because there's that much more debt, that much more instability, and a lot of bad stuff. And who this is going to benefit, what's happening now and a declining economy, don't you?
Well, everything so far has benefited the 1%.
Yeah, well.
And to the extent that they can hire high-powered financial advisors to protect them from what's coming, then they'll probably benefit again. But, you never know. If the stock market tanks, the top 30 or 40% of the richest people in the Western developed world financial system own basically all the stocks and bonds. So they're the guys who are at risk from an immediate market correction, people figuring out that this isn't working and dumping their financial assets. And so you could see a return to or a lessening of financial inequality via the marketplace through a massive bear market. Which would kind of be poetic justice. But, if the past is prologue, the guys with all the capital will figure out a way to make this work for them too.
But I'm thinking the election is going to work totally in Trump's benefit, right?
Yeah. Well, outsiders tend to do well in times of political chaos. And that's what we're seeing around the world. The National Front, which used to be considered neo-Nazi, is doing really well in French polls. And the British Labour Party just appointed a guy who's really an unreconstructed Marxist as the leader of their party. And here you're seeing outsiders, at least on the Republican side, do very well in early polling. And Bernie Sanders, who you could definitely consider an outsider for the Democrats, because he's an independent. He's not even a registered Democrat, and he's a socialist. And he's drawing the biggest crowds on the Democrat side and doing very well in the polls. He's a solid second to Hillary Clinton right now. So when people lose faith in the political system, they start looking outside the political system for their leaders. And as a general rule, then you get the extremists, because they don't choose somebody who's middle of the road, because that's kind of mainstream. They'll go to either the far right or the far left. And so you get instability, because the far right and the far left, by definition, imply radical change if they get into office. And historically, it's been negative change. There's never been a socialist system that worked, right? And we've seen what far right leadership does in places like Chile and Spain, and it goes on, where you take a really extreme party, put them into power, and chaos ensues. And so we could easily see that. Let the National Front win in France and try to pull France out of the Eurozone, and let us have a Donald Trump or Bernie Sanders in charge here, and they won't be able to generate any kind of majority in the legislature, and so we'll have absolute gridlock. And but that's what you should expect when the guys in charge completely blow it, the way our guys have. The oligarchy in the U.S. They've been an aristocracy for 20 years now. The big banks and the political class have combined to basically run the show the way the European aristocrats did in the 1700s. But
similar results.
They did a very poor job.
With similar results. Nothing good can come of this, let's face it. When it gets too concentrated, the power, and the people who all they care about is feathering their own nest, their own thing. They don't care about the welfare of the country. And we're seeing the results of it now, selling the country out.
Yeah, not that they don't care about the welfare of the country. They come to associate their own welfare with the welfare of the country. And the Lloyd Blankfein at Goldman Sachs a while ago said, "We're doing God's work." And,
right.
And the Treasury Secretary, who's an ex-Goldman Sachs guy, during the 2008-2009 bailouts, said that we weren't trying to bail out the banks. We were bailing out the economy. Because they were just giving money directly to the banks to do it, because in his mind, the banks were the economy.
Well, we all believe that, right?
And with great power comes great responsibility. And those guys didn't live up to their responsibility of spreading the wealth around and making sure that with their power, they lifted everybody else up. They basically went for their own immediate welfare in terms of their bank accounts. These guys became billionaires. Jamie Dimon, the guy who runs JP Morgan Chase, is a billionaire now. And he's a bank manager. How can a bank manager become a billionaire? And how can politicians become multimillionaires? You make what, $140,000 a year if you're a congressman. Well, becoming a multimillionaire on that kind of salary while you live in Washington, D.C., which soaks up easily that much money and more just to live, you have to wonder about that. Well, the case is that these guys are gaming the system for their own benefit. And that's becoming clear now, because the money's not making it down to Main Street. So the vast majority of people in the country who aren't seeing any benefit from this, while this tiny concentrated minority in the U.S. is just having a ball, just making more money than they've ever made before, is leading to voters who vastly outnumber the 1% to start looking around for somebody who's willing to stand up to them. I have a links list category on dollarclaps.com that has Ron Paul, Rand Paul, Elizabeth Warren, and Bernie Sanders in it. And the only thing that's a commonality between those four people is that they're willing to stand up to the big banks and call it like they see it. Their prescriptions are very different, how to fix this, and the benefits of one or the other being in charge would be very different, but they're at least willing to stand up to the big banks and say, you guys are scamming the rest of us and you have to stop. And if elected, we will take steps to break you up or rein you in or tax the hell out of you or whatever, and that's refreshing. It's nice to hear stuff like that, because to the extent that they become more and more popular, it means more and more individuals in the country are starting to figure out that the system is being gamed for other people's benefit.
Yeah, right.
And of course, the revolution that results from that is going to be incredibly messy, but it has to come one way or another.
Agreed. There's no way out of this other than a complete revamping of the system, the financial system, and the economy. And that's the thing. Once you start tinkering, you never know where it's going to end up. If we thought that it was going to be good for capitalism, that would be one thing, but it very likely won't be, because it's all capitalism's fault that this occurred in the first place, right?
Yeah, it's easy for somebody who's not paying really close attention to look at the big banks and say, well, this is what happens when you let capitalism run wild. You get these big, powerful organizations that basically suck all the money out of the system for their own benefit. But what that really is government-business partnership. That's the opposite of capitalism.
Yeah.
In true capitalism, you have competition between relatively small players and relatively numerous players, all trying to do well by giving their customers a great deal. Mm-hmm. And that's not what you have in the banking system, of course.
No.
In fact, MarketWatch just posted an article this morning about how the big banks are telling corporations they don't want their deposits anymore. Because the big banks they have so much cash that they can't really turn more deposits into bigger profits, so they don't want to deal with it anymore. So they're raising fees on corporate cash deposits, which in effect means negative interest rates. They're charging corporations for a storage fee for depositing money in the big banks. And that's another thing we're going to see going forward, because the banks are so satiated right now. They've gotten so much free money from the governments that they really don't want your money, because there's administration costs associated with managing a bank account, and they don't have any way of putting that money to work that pays those administrative costs. And so they're going to start, one way or another, discouraging people from depositing money in their bank branches. So they're going to lower interest rates to the point where it's negative, which in effect is charging you a storage fee. And they're going to impose all kinds of other fees and generally just make it hard to hold cash. And that's all part of the war on cash, because you can't have negative interest rates if people are free to move their cash in and out of banks. No. And they're going to need negative interest rates as part of the next stage of the economic experiment, in which government grows unconstrained and the big banks grow without limits, and everybody else has to pay for that. And how we'll pay next is negative interest rates, among other things.
Yeah, seems pretty obvious. Well, on that note, on that cheerful Monday note, we've got to move on, but find John's work over at dollarcollapse.com. Must reading. I start my days out there as well. And you'll find the link, as always, to our site, financialsurvivalnetwork.com. Make sure you sign up for the newsletter. Don't forget, we've got a property tour coming up with our sponsor, Jason Hartman, in Orlando, November 14th and 15th. Just go over to jasonhartman.com/Lutz. And hey, don't forget, we've got a webinar coming up on how to pay off your mortgage in 5 to 7 years without really trying. John, till next week.
Thanks, Kerry. Till next week.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.